Hi, welcome to EQD Research Global Insights for Tuesday, February 23rd. Today, I'm going to talk about the NASDAQ 100 weakness, European volatility check-in, look at it versus VIX, and then something very exciting from us at EQ Derivatives. Now, the NASDAQ 100's been under a little bit of pressure this week. The year-to-date performance is now slightly behind the S&P 500 as I stand here, way behind the Russell 2000, lagging by about 10%. Now, this is on the heels of really strong performance last year. Kevin David over at SIBO wrote something up and talked about the Russell 2000, which is way ahead of its 200-day moving average. I'm going to link to that below. Now, looking at trades on the NASDAQ 100, I did write up an iron condor from last Friday that's not looking too good, as the NDX is about 300 points below the short put strike, and that iron condor actually expires tomorrow. We need a rebound to 13,300 for that trade to do okay. Another trade taking advantage of NASDAQ 100 under pressure, along with increased implied volatility. Yesterday with NDX around 13,300, somebody came in and sold the March 5th 12,000 puts, bought the March 5th 11,950 puts. They took in between $1.60 and $1.80. They did this in a lot of different lots. That 12,000 strike price, it's 11% below where the NASDAQ 100 was when the trade went off. So got a nice buffer up to next Friday's PM expiration. Checking in on European volatility, the VSTOXX 50 is down a little today. VSTOXX is a little bit higher, but what I really wanted to do was highlight the two curves, the VIX curve and the VSTOXX curve next to each other. VIX is a little bit higher than VSTOXX right now. However, VSTOXX, at least this morning, is basically in line with the March future. VIX is actually at a $1.65 discount to the March futures contract. Both entire curves are pretty flat going out beyond April, but the VIX futures are at a bigger premium than the VSTOXX futures relative to the respective volatility indexes, spot volatility indexes. Bottom line, it looks like more risk is being priced in right now for US stocks versus European stocks. And then finally, we are all very excited about the launch of the Journal of Systematic Investing today. The first issue came out this morning, the topics, algorithmic models of investor behavior. This actually combines heuristics with some systematic investing strategies, showing how they might be able to do better by incorporating heuristics. Article titled "The Friend of Your Trend" looks at trend following strategies, but then looks at the volatility or the asset return to volatility ratio for the underlying assets that you're applying trend following to. Alternative risk premia timing takes a look at ARP over various time periods, noting that most indicators do deliver a positive information ratio. And there's an article on the performance of alternative beta. You can visit the link in the description below to take a look at it. There's a one-time free access. You can't refresh or anything else. You got to be very careful, but you can read through it. And that option is available for anybody that wants to check it out. Again, link is below. So thanks for joining me for EQD Research Global Insights for February 23rd. As always, if you like what you heard and found it useful, please hit the like button below and do not forget to subscribe. We also welcome comments and are open to suggestions on how to make this program more useful and informative. And also, if you want to send a comment directly to me, feel free to use my email address, rhodes@eqderivatives.com.